will have on one sector which is being talked about quite a bit. Real estate is that sector. Abhishek Lodha is Managing Director of Lodha Developers, and it's a pleasure for me to welcome him on the show. Abhishek, good morning. Great to have you here. Thanks very much. Prashant this side. What are you seeing as a fallout in the, over the last 14-15 days since demonetization has been announced, Abhishek?
Prashant, my own sense is that the first 4 or 5 days were one of confusion and lack of understanding of what this all means. I think over the last 4 or 5 days, things have settled down a lot more. People understand now what is going on. They recognize the fact that while this is called demonetization, it really is a scheme under which there is an exchange of notes, as was done at the time of the euro being introduced in 2000. And they recognize that this will in the medium term help the economy develop and grow. And therefore, while there are short-term pains, everybody seems to be of the view that it will help the economy in the medium term, and therefore is a good thing to do.
Specifically for in the real estate space, what are you seeing, Abhishek? What have you seen?
I think we've seen that the level of interest continues to remain quite high. Just last week, for example, we had more than 1,000 families walk into our various developments in Mumbai, which is online with what was the numbers in the weeks before. We see that people want to have more sort of knowledge of what will happen with interest rates. As Prime Minister Modi yesterday mentioned, he expects interest rates to come down. And I think people are slowly starting to understand that over the next few months, interest rates will come down in a meaningful manner. As that happens, there will be a fall in EMIs, and consequently there will be an increase in appetite or demand for real estate. So there is a section of people who want to wait and watch and see what will happen with interest rates, and there is a section of people who understand that this is a good time to buy while interest rates are about to come down but have not yet come down.
So Abhishek, in your opinion, there shouldn't be any correction in real estate prices at all, considering that demand is still there and inquiries are still happening? Or do you expect at least selective real estate to correct, probably based on distressed sales?
I think, CNBC, you guys understand the economics of this whole demonetization exercise better than me. But from what I can understand, really pricing is determined by supply and demand. And except for pockets which have very high involvement of cash, there are certain pockets, for example, in North India, where there is a very high involvement of cash, which is not the case in Mumbai or Bangalore. So where there's a very large component of cash, there may be an impact. But other than that, I think overall, if you see the fact that most people now expect interest rates to be down by about 150 basis points over the next 12 to 18 months, if you would have that kind of stimulus, you expect demand to remain fairly good or even strengthen.
But, are consumers holding off on the expectation that there could be a correction in real estate prices? Is there some anticipation of that happening from the consumer point of view? And hence, there's a higher negotiation which is taking place as well.
I think having heard everything in the media and, we are watching your channel, watching other channels, watching other experts, people definitely have this question on their mind. Will real estate prices come down? So that is definitely a part of the conversation. Over the last 10 days, we've sold about 150, 160 crores of new real estate, which, is for a 10-day period fairly good. So what we see is that people come in with this question. They equally are now starting to hear over the last 5-6 days about the fall in interest rates, and both these questions are in their mind, and they will discuss this. So this is more of a discussion point than it was before 8th of November. But as they think through the discussion, I think the decision making, while it takes a little bit longer as they analyze this, I think the outcomes ultimately are seeming to headed in the right direction.
Right. Abhishek, so you said certain pockets of high percentage of cash, North India, for example, Mumbai, not so much, and I agree with that. But when we analyze this thing, it's such a big spread out sector that what you can say, what holds true for one part of the country is not true for another part of the country. Situation could be completely different. Should we look at geographical sort of distribution when we analyze this thing, the impact it will have on prices, or should one look at whether go by builders, tier 1 builders like you, or tier 2 mid-level, where cash incidence might be a little high? What's your sense?
I think it will be both geographic and driven by the reputation or the background of the developer. But in both those cases, the question is the same. Is there a high prevalence of cash in the transaction? If the answer is no, then nothing really changes. On the contrary, interest rate reduction helps demand. If the answer is yes, there is a high prevalence, whether because of the geography or because of the developer, and yes, there can be a developer in Mumbai who may want, or who used to want, a large amount of cash, those transactions will get affected and prices may get impacted for those pockets.
Just to play the devil's advocate for a bit, as we've been discussing, the common argument is that prices are headed lower. One of the arguments given is that because there is no cash, approvals, builders will not be able to get approvals, and that will pressure prices lower. Builders will be forced to lower prices. But it could work. And you started by saying it's a function of demand and supply, right? I mean, if there are no approvals, supply is constrained. If rates come down, demand increases. I'm just saying that could it go the other way? Instead of prices dropping, yeah, go on. I know you're smiling, but this is an industry question, not pointed towards Lodha. Yes, go on.
You've analyzed the... No. So you've analyzed the problem analyzed the situation quite correctly. You have a situation where you have, at least in a meaningful percentage of consumers' demand, likely to go up because of the fall in interest rates. People are speculating that supply will reduce because, for example, approvals will not come through, or there will be developers who will not be able to complete their projects because their business model was based on cash. Now, in this situation, to say that prices will fall can only be one, outlier scenario. The likely scenario with demand up and supply falling is, on the contrary, either prices go up, or at the worst case, they don't go up, they remain stable because developers want to sell a larger part of their inventory. So really, this whole hypothesis which has been created that, across the country there will be a fall in real estate prices, I think really, consumers need to get better information from, well researched analysts and channels like yours, because I think they are currently being misled. I heard of an e-commerce player saying that, we have 70% cash on delivery, but our prices will not fall, real estate prices will fall. It seems to be the flavor of the season rather than, any sensible analysis to support this kind of view.
Okay, Abhishek, you know what? We have a couple of more questions for you of Lodha Developers. Abhishek just had a quick question on the affordable housing market. We understand that that's going to probably see a good amount of a surge simply because, 100% of transactions are in check. It's a lower ticket price, and hence even the cash component, if any, would be negligible.
I think, Ekta, you're absolutely right. I think, affordable housing, mid-income housing, housing below, in a city like Mumbai, below crore and a half, I think it'll get a tremendous boost. These are salaried people. They are going to enjoy the lowest ever EMIs India has ever seen. Our Honorable Prime Minister has done this with a fair amount of thinking. He wants to make sure that there is more purchasing power with the middle class, with the lower class. And, when that purchasing power comes, all demand for all kinds of consumer goods, including, good quality real estate at good locations at the right price, will benefit from it.
Okay, just one last question, and then we have to let you go, Abhishek. Actually, two, very briefly. One, in your assessment, as real estate funding in India stands right now, what percentage of money is institutional funding? Institutionally funded? And two, there are lots of these rumors and messages going around essentially saying that we are going to see another round of another move from the government, specifically with regards to real estate this time, Benami properties, etc. What are you picking up, and what are your thoughts on what's being sort of pushed around as something which is very imminent? Go on, Abhishek.
In terms of the volume of the quantum of funding, I would say at least 90%, maybe even higher than that, is institutional. Institution means banks, NBFCs, foreign investors, whatever. More than 95% of the funding in real estate is institutional, and all large developers are having institutional partners for their financing. In terms of the Benami Properties Act, I think it's again a very, very welcome move. As India becomes more transparent, you will have more people being able to participate in the market, and ultimately that is healthy for the economy, and real estate is a sector which always does well when the economy does well.
Okay, Abhishek, thank you very much. It's a pleasure. Good speaking with you, and